evening. Let's look at Bollinger Band. So we're looking at what Bollinger Band is. So it's basically an envelope, and how that envelope is created, we'll look in the slides ahead. But this is some sort of envelope in which this particular, at least this stock seems to be moving. And can you see there is a middle line also? There is a middle line also. Can you see that? Yeah.
Yes.
So we'll try and understand what is that middle line. All we understand is somehow on this screenshot that you have got, or this image that you have, there is an upper band and there is lower band. So that is observation number 1. This is observation number 2. And the other thing here is that whenever it touches the upper band, sometimes you would see this corrects, and when it touches the lower band, you would see that this moves upward and crosses this one and moves further, and you would see this happening. So, but however, so there are two kinds of observation, I'll say. One, the stock touches the upper band and keeps on moving. Sometimes reverses from the mid of this envelope or this band, as you call it. Sometimes it touches the top of the band and then falls and keeps continuously falling. That's observation number 2. It touches the lower band, crosses the middle line, and then touches the upper band, and then falls and touches the lower band. And this happens a couple of times. But this sort of behavior is also possible where it does not correct after touching the upper side of the band. Point number 1. The other side of the observation, or the other side of the coin, is that the stock, despite the touching the lower band, it is still keeps correcting before, after, and then after some time it starts moving. So it is not necessary, as you see in this case, that it touches the upper band and then corrects, or it touches the upper band just once and corrects, touches the upper band maybe once or twice and corrects. There are periods when this just keeps on moving ahead, and there are periods when it just keeps on moving ahead. So, but how is this band derived? So we'll go to the tool and try and understand this. But this is the takeaway from this particular slide. Let's move on to the next slide. But before I introduce you this, let me open Bollinger Bands. I'll remove all other technical indicators just to be very clear as to what we are speaking here right now. And I will add Bollinger Bands here for your comfort. Now, what is the observation that you see? This is a Bollinger Band from the real life. So this is standard platforms, right? And do you see that when the stock in scenario 1, the stock touches the upper end of the band and just keeps on moving? So this is a bullish and an extra bullish phase, I would say. The stock touches the upper end of the band and corrects and continuously keeps on correcting. Sometimes it touches the band once, lower band once, and then moves up. So we have scenario analysis 1 here, we have scenario 2 here, we have scenario 3 where it continuously corrects, then we have scenario 4 here where it touches once and moves up. So are you all synced in as to how this operates? There are different possibilities. I guess yes. The second point that I want to bring to you is, do you see that sometimes the distance between the channel reduces? Yes or no?
Yes, sir.
I hope you see that the distance between the channel reduces, right? It is constricted. It is, it's not as wide as you see at other places, and these are some of the places. So what is Bollinger Band all about? So before I introduce Bollinger Band to you, I am just gonna click on the Bollinger Band setting and help you understand what Bollinger Band is about. So what Bollinger Band is all about is it plots SMA, which is simple moving average of the stock over a 20-day period. So it is on the closing price of the stock, it is mapping the simple moving average. So which is this orange line that you see right here. As you can see, there is an orange line which, so this is a 20 days moving average. So then the question is, what is this blue line on the top and on the bottom side of it? So we will double click on this one and go back and see what this says. Do you read standard deviation here? So for every point that you see, orange point that you see, for example, if you're seeing this point, it will map plus 2 standard deviation from this point and minus 2 standard deviation from here, which gives it the band. So plus 2 standard deviation from this particular point, and what is that point? Say this is the point, and minus 2 standard deviation from this one. This is the band. Basically, for those who do not understand what standard deviation is all about, it is like from this point, if I take 2 steps, so how far can I go? Just because I take 2 steps. If I take 2 steps back, what is the farthest point I can go? So that is what standard deviation is all about. But you're not just taking only 2 steps in one direction, you're taking 2 steps in 2 direction. This I would call as plus 2 standard deviation. It is on the upside. You are going below the SMA, simple moving average, which you have looked in the previous classes, and this is known as minus 2 standard deviation. So for every point you are mapping, what is the maximum possibility plus 2 standard deviation and minus 2 standard deviation? The question is, why is that done? There must be some logic behind that. Why plus 2 and why minus 2? So if you have ever studied statistics in your life, I think this they introduced at a very early age, maybe in 11th grade. If you have studied mathematics or statistics, I am sure you would have seen bell curve. Have you? Has anyone of you seen bell curve? Something like this? HR, the guys are the one who do the most. Yes. So what does plus and minus 2 standard deviation talk about? So if this is the average point, say, if this is mean, if this is the average point, right? If I can plot this, if this is mean.
मैं बोल रहा हूँ ये जो मुझे बॉलिंगर बैंड दिख रहा है और जो आप समझा रहे हो वो बचपन की वो याद दिलाता है कि स्कूल में जब पीटी करते थे कि 2 हाथ आगे जगह छोड़ दो, 2 हाथ पीछे जगह छोड़ दो, जिससे
पीछे जगह छोड़ दो, एग्जैक्टली
पीटी आराम से कर सके बिना किसी को टच किए.
एग्जैक्टली बहुत बढ़िया आपने एग्जैक्टली इट्स अ वेरी नाइस एग्जांपल दिया यू गिवन करेक्ट. अब ये क्या बताता है y प्लस एंड माइनस 2 standard deviation. ज्यादा स्टैटिस्टिक्स में आज नहीं जाएंगे, थोड़ा बहुत स्टैटिस्टिक्स वी हैव टुवर्ड्स द एंड ऑफ द सेशन आल्सो in this via this only. So basically standard deviation and this formation, which is known as normal distribution or bell curve, tells us what, right? We only have to take the implication of it, the takeaway from it. So what happens when you move 2 steps from the average? Say you have a data point, say 10-20 days of data. If you calculate a simple moving average, this you can also call as simple moving average. So you just calculated average or mean or mu, however you call it. This is the average. So from here plus 2 steps here and 2 steps here. This basically covers your 95% of the data. So if you go plus minus 1 standard deviation, it covers 68% of the data. This represents 95% of your this entire. If I can write this, so this entire thing represents 95% of all the occurrences of all the data sets. So in a very simple language, what does that mean? Plus or minus 2 standard deviation. It means that you are talking about that in 95% of the cases, what is going to be the outcome? what is going to happen. In other words, if I just tweak my sentence, or if I change my sentence, all you are gonna say is that there is a 95% probability that the stock price may go here, or there's a 95% probability that the stock price may go.
नहीं, बट इसमें पुरातन ये तो पास्ट के परफॉर्मेंस को दिखा रहा है, फ्यूचर का कहाँ बता रहा है कि ये स्टॉक में गो।
नहीं, these are all lagging indicators. The volatility is all based on historical volatility. और
जैसे आप बाकी जो टूल बताते हो उसमें फ्यूचरिस्टिक दिखाता है, इसमें तो ये आगे जैसे टूल आगे गए ही नहीं कि फ्यूचरिस्टिक क्या रहेगा।
हाँ, मैं उस पे अभी आया नहीं, उसको इम्प्लीकेशन पे पहले आपको मैं इसका मैथमेटिक्स समझा रहा हूँ, which probably people don't explain कि what is the mathematics, why you have, first of all, where does this band come from. So when you calculate the average point, which is say this point that you are looking at, the orange point is nothing but the data which is here, right? So if I can just mark it very clearly, we are talking about a data which is at the center, right? Why does it look like a bell curve? What is a bell curve? If you're not seeing, please do not really worry about it. But if you have ever come across a bell curve or a normal distribution curve, this SMA, this middle point, the average point that you're seeing represents this point on the graph, point number one. Point number two, this point on the upper end that you are looking at represents nothing but within plus 2 standard deviations, it represents this particular data. So from the average, how far it is, from the simple moving average, how far this is. This minus 2 standard deviation basically represents, if you were to connect it on the lower end, this point basically represents minus 2 standard deviation. So all I'm trying to say is we will look at different ways to read that, right? All I'm saying is why this plus and minus 2 is plotted. So this is plotted because it covers 95% of the data set. But how do I understand 95% of the data set in a layman's language? So in a layman's language, in a non-statistical terminology, plus and minus. So if you move 2 steps ahead and if you move 2 steps back, it reflects what can happen if in 95% of the case. Or when you say there is a 95% chance that it will rain today, there is a 95% chance that Tanla will move up. There is a 95% chance that Dr. Reddy's will go up. There is, or if I tweak my sentence even further, there is a 95% chance that Tanla may operate between these ranges. Now, if you want to measure that, that's a big range, I'm sure. Let's see this from here to here. If you want to measure, this is about a 30% deviation. So that's a big data set. If you want to read this here, just read about this one. So now where do you see? So you are saying 871 versus 650. So this is a normal range. I'm just trying to highlight this here. It is saying the average is 779. Sorry, the closing price is 779. It is not quoted. Yeah, so I think closing today is 761.60. The average is this point, which is 779, which is the simple moving average, this one. The closing price, as you see here, is below 779 or below the orange line. On the upper side, it is saying that there is a 95% chance that the stock can possibly go up to 867, and there is a 95% chance, it is within that 95% chance that stock can fall down to 690. Thanks. So now, do you notice here that the band has expanded? I'm sure you're seeing this, that the band has expanded here. Also in this case, you would see that the band has expanded. If you see this one, right, that the band has expanded. So expanded band means what? Expanded band only means increased volatility, because Bollinger Band is measuring nothing else but volatility is just mapping volatility plus minus 2 on both the sides. It is mapping volatility. Now, please understand the volatility does not have a sign. That means what? It could mean plus also. It could mean minus also. What does that mean? That means that the stock can go up also, or the stock can go down also. Now, if there is a stock that you have been watching, okay, suppose there is a stock which is in your watch list, and you have been your view is long on that, so your view is already there, you think that the stock might possibly move, and then if you're seeing the band expanding, that means huge volatility has come up, and there is a high probability that this stock can start moving or would possibly continue to move. The other analysis part of this one is after a long run, after decent move. So this is a decent move on the upside. If you are seeing the band contracting, especially this kind of a situation where you've seen this formation, the stock has has been moving continuously, and now if you're seeing the band contracting, this is definitely uh, a sell sign, or possibly start of a problem. Is something fishy. Sometimes you'll see after this, also the stock has continued to move, the band has expanded on the upside. But if you're making your returns, and if you're just wondering when to sell, if you're seeing the band contract, I think this should give you a cue that this is a sell side indication. That is very clear. You got to be very, very careful when you see the band contracting. That is something you should watch out for. uh, Likewise, if you see the band contracting, also if you see sometimes you'll see that the mouth has opened like this. The stock was already consolidating for a very while, or had corrected from top. Say it had corrected from top, was sitting here for a long while, and then you see the band expanding. You're wondering where it is headed. I think that is the right entry time, because you have seen the band expanding, and this can help you in fetching some returns. It can be used as an additional tool, but not as only tool to make a decision about it. Sometimes, if the band continues to, if the stock continues to run along the upper side of the band, you can continue to hold it. If you see it ever touching the SMA or falling beyond it, I think that is the time you should definitely exit. So this is how you can possibly use. We will look at some of the stocks that have been in our watch list, and you can decide for yourself as to what's happening. So this is now. What do you notice here on the Tanla thing? Do you notice something? And this is one stock that I have moved on a weekly time frame. If you see the stock, the bands are still pointing downwards. Possibly there is a curvature coming, possibly, but no one knows. This has continued to slide, but if I'm looking on the daily time frame, you would possibly seeing the bands have contracted after a continuous fall. The bands have contracted means volatility has fallen, and this volatility has fallen after the stock has corrected significantly. There's a very, very significant correction. This stock, if I understand correctly, was trading at 2000 levels also. Now it is at these levels, around 690 odd levels. There was a contraction in the volatility. That means if the volatility is contracting after the stock has corrected significantly, that means stock is possibly settling down, and the could selling pressure could reduce. That's a possibility. I have picked up this stock. If you see this band expanding, that means the trade is working in my favor and I may want to hold it for a couple of days. What does not really work in this favor is a reduced volume. So let's quickly check the other stocks which are there in our this thing. So possibly the band is expanding now. There is a movement and you might continue to see some movement on this side. Again, there is a very significant correction on the Muthoot Finance side. Uh, some bit of correction. Now this has expanded, only talks about expanded volatility. Volatility can help. You can judge how the volatility was there. This is how the volatility was there, and now look at the gap here. All of the stocks may not give you that cue. Some of this could look very tricky to you, but especially in cases where you think the stock has corrected significantly and the bands are expanding, for example, in this case, now this could be because there has been a huge correction. This could be a better bet as compared to someone which has already been on the run and there the bands are expanding. Obviously, the risk is higher, so you would want to position accordingly. But here, if I see the band expanding, it gives me more comfort, possibly more comfort, that the stock has the volatility is increasing. There is movement happening here, and possibly I can make some money as well. But this is not the only indicator. You will look at other indicators like support and resistance, and that possibly could give you some idea. So I'm looking at all the possible stocks that we have in the list. I will go to the other green candles here. Let's see if you notice something interesting. Possibly there is a band expansion happening. This is a stock that you'll have to watch out very carefully. I think there is some action happening here. PGR Diagnostics, someone had asked, it was in our watch list. This is how he has been tracking. And I am only today want to look at the stocks which are in action. I think out of all this, the best cue that I get here is I think this one where I see the band expanding. I think so now I'm going to show you some settings here on a Bollinger Band. You can change the number of days. So 60 days is like 3 months. So you can, this is how it looks. Let's look at Dr. Reddy's, how it looks like. Let's look at Metropolis. So you are looking at over a different, now the band is has contracted and is expanding. So because the stock has been falling for almost last 60 days, you would want to, nothing gives you an accurate measurement. All you would like to do is play around with the settings. So I have changed the settings because I love looking at 60 days of data, right? I don't want to be color blinded. I don't want to be blindfolded by 20 days of data. I just want to look at 60 days of data and see how it looks very, very different. Now the stock is very bullish, as you can see, and possibly it may continue rising because it is supported by volume. Now, Premji, do you see how this the whole view changes? I have just played around with the number of days. Will I take a decision basis Ramco Cement only if I have done my study properly, and if I feel that I should be long on this one, then what is the target you can have? So you can also target as the upper side of the band as your target. That's one. Now, if I were to look at a smaller volatility, assuming that I think this is not possible, maybe I just want to look at, say, one standard deviation. What is one standard deviation? Again, I would plot this a normal standard deviation. This is your average point on the data. If you have a normal data, which we'll look into advanced options class that we're looking at. So when you look at, say, theta data or gamma data, you'll see this kind of a plot being populated by the Excel. So this is average, and all you're saying is when you do plus minus 1, you're saying that I am only looking at 68% of the chance as to what is going to happen in 68% of the chance. So this represents 34% of the data, minus one step this side, and plus one step, it represents another 34% of the data. Total, it represents 68% of the data. it basically means that what's going to happen in 68% of the cases. Will it rain on Monday in 68% of the case, or is there a probability of rain? And you'll say yes, there is a 68% chance. That means you're talking about plus minus one standard deviation. So I have reduced. I want to cut down on my losses. I don't want to look at plus minus 2. Why I don't want to look at plus minus 2? That is a question that you'll ask yourself. And I will show you the data here. I'll prove it using the data point that if you're looking at plus, so I'll take the readings, say plus 1 standard deviation, plus 2 standard deviation, minus 1 standard deviation, and minus 2 standard deviation. So if you're looking at the data right now, this is plus minus 1 standard deviation, plus standard deviation, it tells you that 774 roughly approx is the upper band. The lower band is probably 681. If you look at plus minus 2 standard deviation, which is the default setting for this one, just give me one moment, please. And if I do this 2, you will see how thick the band becomes, and the data becomes 820 and 634. But my target is not that huge because the stock price is at 742. From 742 to 820 is a long journey, and even this is a farther journey on the downside. So I am looking at what happens in 68% of the case, and when the stock has only to move about 30 bucks. What happens on the lower side when the stock has to move? So this is 40 and this is about 60 bucks here. So I am only looking at that one. The average point is this one. So you'll wonder why there is the gap here is 40 and why the gap here is roughly about 60. It is because the average point is not 742. The average is the orange one that you're seeing here, which is 727. So I hope that solves your issue. I think for me, if I'm doing an ultra short-term trade, 20-30 bucks is something that I look at and I close that point. So I am looking at only 774, only 20-30 bucks I want to make. And in that case, now I will evaluate all the other positions that I have, whether I can make money in those cases or not. I think in this case, I have seen a great fall. And now I am seeing possibly this is pointed upwards. So it is possible that it turns upward and expands. That is one. The second possibility is that this remains at this one and the stock moves from here to here. Even in this case, given the volume, I think the setup to me looks okay. I would want to use this one. Ramco Cements, I may not be very comfortable with Ramco Cements here. If I'm looking at, say, Lal Path Lab, let's look at this one. Right? And for me, because I'm using a 60 days data, I think this has already touched the upper band. And if I am a low risk taker, it has already touched the upper band. It is possible that the stock goes 100 bucks, 200 bucks, 500 from here. But I am not willing to take the risk because it has already touched the upper band. If you want to notice the sell pressure here, every time it has touched the upper band, there is a sell pressure available here. So I don't want to take that risk. So this is not suitable for me. So I'm not going to trade on this one, right? Likewise for Marico. But if you look at, say, Metropolis, this could just be the start of the journey. So what manipulations we've done, we've looked at 60 days of data. So we are really looking at a little longer period, which makes the data, I think, as I would want to put, I mean, the more data set you have, the better it is. The longer duration you have, the more observations you have. It is closer to the population. It's not just a sample size. It's closer to the population in terms of statistics, statistical terminology. And I have reduced my possibilities to only 68%. I am seeing, give me small possibilities. I really not focusing on bigger possibilities. So give me one step, how it can move, how does it look, and one step back, how does it look, how much can I lose. If you remember this, I said from, if it falls, if we were looking at Tanla, while we are looking at 40 bucks on the upside, remember, if it falls to 680, there is a $60 loss. So you will also have to look at the risk to reward ratio, whether this is suitable or not. So from the level 742, it can go to 782 or levels, but it can fall to 680. So risk reward ratio you have to check. And I think this tool can also be used as a risk reward ratio. And I don't think anyone will talk about this one using Bollinger Band as a risk reward ratio. No one in this world I've ever heard about talking about this. So you have to think of this as a risk reward ratio. Think how this can possibly impact you, because if the stock hits the lower end in a day, it can fall from the existing price 1523 to 1339, or it can move to 1580 to $50 from here. So there is a lot of risk if it goes to this one. Is this risk suitable or not is something that you would want to look at. So you will look at risk reward ratio also if you're analyzing a particular stock. Let's go to Dr. Reddy's and let's look whether it makes sense. It's been in an upward move, very close to its average also. Does the risk reward ratio state that I can make some, is it suitable? So let's look at this one. So it is saying almost about, so if it is 4200, you'll have 300. So it is roughly about 250 rupees from here. And the lower end is about 200 rupees from here. So it is a 1-to-1 risk reward ratio. If it goes on the upper side, you will gain about 200 or 250 odd rupees. So from 4265, it is saying it will go to 4500. So roughly about 20 to 150 rupees on the upside. And if it falls from 4250 odd rupees, it can possibly come down to, it's almost a 1-to-1 risk reward ratio. So I think this is a very intelligent method of looking at the risk reward ratio. No one talks about it, but the standard deviation is all about what steps, one step ahead, how does the price look like, one step back, how does the price look like, and how we can make money. This is a very powerful tool, but never used intelligently. People just follow this one and get caught thinking that this will continue to rise, as you have seen in some of the cases, like this is a continuous fall like this one. But I think there are smarter ways to look at this one rather than getting caught in this kind of very simple and naive usage of the. So let me know once you're great. So another thing that you can do is you can combine Bollinger Band with RSI. Great. So another thing that you can do is, this is part, I think, 3 of the Bollinger Band series. So another thing that you can do is you can combine Bollinger Bands with RSI. If you are getting an, say, overbought situation, say it is already in the 87-90 zone, okay, and if you're seeing the stock here on the RSI, you can very well expect the stocks to decline, and you can check that on the Bollinger Band itself and figure out as to where it is, what should be the action. So you can short there, or if it is in a, say, over sold zone, you can watch that out on the RSI. And if you see the bands expanding, you can look at that. So what we'll do is we'll go to say COVID situation. Okay, we will just take, say for example, let's go back to its original setting first. Name a stock that you would want to watch during COVID situation. Just name me a stock. Tell me one stock that you would want to see.
IndusInd Bank.
IndusInd Bank. Okay. So you want to see IndusInd. I will zoom it in. Can I hide the drawings? And now we are going to 2020. So you are back in 2020. What you would also want to do is possibly put RSI here, uh, which could give you some indication as to what was happening here. And there you go. So what levels do you see RSI here?
11.
Yes, so it is at 11. And this is exactly on, say, 23rd of March when it was the lowest. Now, this is an oversold situation. And this is how I will remove all these lines for the time being. Now check. Do you think if you combine this makes much more sense? Your RSI is already at the lowest level, and you have this declining. Now, when to buy, whether to buy at this level, that Bollinger Band will not tell you, because Bollinger Band is all about volatility. Meaning what? If the band is really big, that means there is lot of volatility. But RSI tells you relatively, whichever year it is, whatever price it is, whether it is in the oversold zone or not. So for example, you know that anything below 30, especially, you know, a 25, 15, these are oversold zones. So if you know that this is an oversold zone, would you not be willing to take a risk here at these levels when you are already seeing this? Now, this is a smart investor would want to do, rather than blindly trading on this one. So you have BB plus RSI. Now let's play around with the settings and see how it changes. What I'm going to do is I will now make this 60 days. Let's see if you have the same assumption. Check this out here. There is increased volatility here. There's a lot of volatility here. Now the volatility after falling is contracting. That means the sell pressure is gone. Right? So would this not be a better estimate? Even if this is not a better estimate, I would want to check this on a 20 days time frame. I would want to check this on a 60 days time frame. Having done that, why would I not want to check this a particular stock and change my assumptions to one standard deviation and see how it looks? So this is right in front of you. This is how it looks. In fact, the volatility is so much. Look, this point, it has fallen out of the band. But if you look at the band standalone, you might not be able to make a decision. But if you have RSI in place, it will give you some idea as to where to pick up. So I think this is the smartest way to pick it up. Club it with an indicator which gives you some intuitive feel whether you should pick up at this level or this level. And I think in that sense, RSI plus BB does a wonderful job, and you are confident when you see this contraction, because this only talks about volatility. If it is volatility of sell side, it is dangerous and it can possibly kill you, it can harm you because it is falling. But if the volatility is contracting, and even if you have seen at this level, which is around say 30s, 30, 35 odd levels, even these are safe levels to enter. So I hope this makes sense to you. Hope you will use this like this. So today, this is for today. Thank you, and you can stop here.